alive? Who's alive? Alrighty. All right, thank you. Instrumental metal music, metal compilation, volume 2, royalty free. We appreciate you. Hey, good morning. Good deal, bro. What's going on? Good morning, Forex traders. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. We're stationed around the world. Ooh, hang on. Anyways, sorry, just threatening someone with a lawsuit. Not a problem. Anyways, hey, so welcome. What are we going to cover today? Oh, the easy stuff, foreign exchange. Life is complicated, right? All right, so I'm interested. There's a poll right there. I want to know what's on your mind. Are you trading dollar, euro, yen, Swiss franc? Let me know what's going on. So far, overnight, the news isn't better. All the people that are in charge of protecting us from Omicron is now, they're all saying, yeah, well, it'll probably take us, 3, 4, 5 months to protect you. So anyways, whoa! So the market moved. So anyways, let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So, what else is going on today? Grandma Yellen's testifying. So is Papa J, right? JP's testifying today. And guess what? They're going to say, well, this new variant is going to be a problem. So interesting. Now, it's more of like, how does the world translate that? I know they're going to say it today. So the thing is, are you going to respond by saying, well, if COVID's going to be around much longer, is that going to push up inflation? Right? Because of continued shortages of supply? That's what would happen. Or do you think that's going to be demand destruction? So you're not going to go to movies and you're not going to buy things and you're, certain things and you're just going to sit home and Zoom all day? Well, in that case, inflation would come down because if you're not driving or if you lose your job because your company gets shut down, well, then oil comes down and then inflation comes down. So like we can look at the same facts and right? Supply and demand. We could look at the same facts and come up with a different answer. You understand that? So it's really going to come down to what camp you are. Are you moving this or are you moving that? Okay. So, interesting. I wish it was easy, right? I wish it was easy. But anywho, we're going to be here every single day. So thank you for subscribing. Thank you for liking, all that kind of stuff. And also, I'd like to invite you to Tradersway.com. Okay, I'm the chief FX market strategist for Tradersway.com. Cool, right? Yeah, I know. It sounds really nice. Awesome. But here's the thing. What are you going to do if there's a central bank intervention? See, right now, the Swiss franc is gaining strength based on safe haven flows. Well, many years ago, the Swiss franc got too strong. Surprised the whole world by pulling a peg off the euro, and brokers went out of business. But Tradersway was totally fine because they actually entered the trades of their clients into the interbanking system like they're supposed to. But the other brokers went out of business or lost hundreds of millions of dollars because, well, it seems like they were actually not entering the trades into the interbanking system, but instead be booking those clients and trading against them. Well, that's sort of a conflict of interest, isn't it? You're like, we want our clients to stay stupid so they can make stupid trades, and then we'll trade against those stupid clients. What kind of business does that? Gee whiz, right? So I look at Tradersway and they're like, hey man, everything's fine because we actually enter our trades in the interbanking system. Well, if you're going to do that, then what's in Tradersway's best interest is that you actually can trade. Wouldn't that be great? They're thinking, wouldn't it be great if we found clients and that they traded not for a couple of days or a couple of weeks and blow up their trading account and go somewhere else, but wouldn't it be great if they just stayed with us for years and years and years? Well, to do that, we'll have to give them competitive fees, right? We'll have to give them their full swaps. We'll have to give them fast execution. Oh, world-class customer service would probably retain clients. And you know what? If we want them to succeed, maybe sort of investing into education would be a good way to lure and attract our new clientele. Think of that business model. Just think of it. Like, seriously. Oh my God, right? So, Tradersway.com. Get involved. See if they can earn your loyalty and respect like they earn mine. Cool. So let's see what you're doing. Okay. Only 59 votes. Did you vote? Okay. Somebody tell FZ Pro that if he hops on one foot in 3 circles to the left and then on the same foot hop in 3 circles to the right and then turn his volume up, audio will work. Wait, why don't you trade futures? Oh, well, I trade cash, not futures. Anyways. All right, so we got a few more votes, so let's go with that. Okay? And by the way, going back to Elm, I have a reasonable pile of cash I put aside to buy the S&P 500. But again, on like my retirement accounts and my corporate accounts and stuff like that, I trade cash, not futures. And it has to do with taxation reasons and stuff like that. If I want to trade, let's say S&P 500, right, your ES. If you're going to trade the S&P 500, I get that through Forex, through correlation. But with Forex, I can earn income. A futures contract doesn't pay you income, right? I earn swap. But the other thing is I get better leverage, right? Right. So anyways, there's and actually better taxation. Now, I'm not your tax attorney, so go get your own tax attorney. So I'm not giving you tax advice, but the way I understand it as a lay person, I get way better tax treatment trading Forex than I do trading futures. So those are a few things, right? Cool. So let's see. Most traders are on the dollar side. Dollar's actually weak right now, which is quite great. Okay? No, I think you got that backwards, Elm. Now, you have to understand that you have to achieve, you have to be, let's say, if you, this is a long question, or a long answer, so let me try to do it short. If you are trading professionally, now there's sort of a caveat. according to the IRS, what is a real trader, right? A real trader is not a day trader, but is not an investor. So an investor might buy and hold for a very long time with low numbers of trades. But again, I'm not your like IRS taxation consultant, so you're going to have to hire a professional. Okay? So you can't just like buy like some dollar and then sit on it for 9 months, and they're going to look at that as an investment, and therefore you're not a trader, you're an investor, and you'll be taxed in a particular way. Now, if you day trade, and remember the government doesn't like day traders. I don't know why, but anyways. So they'll look at it and you're like, oh, you're in a whole bunch of short-term trades. You're like, okay, you're just a day trader. And they kind of spit on you. You're just a day trader. You're not a real trader, right? And they'll look at you like you're flipping AMC stock on Robinhood. You know the government doesn't like that kind of stuff, right? So you'll get taxed differently. Now, if somewhere in between, right, let's say you're a swing trader and you're making 5 trades a week, you're holding it for a couple of weeks or whatever, they'll look at it and say, oh, you're a trader, not an investor, not a day trader, right? Like a real trader. And you achieve trader tax status, which means you trade a lot, but you're not flipping stuff and you're not holding forever. Okay? So if you achieve trader tax status, and usually you get licensed and registered and all that kind of stuff, you have a corporation. So like, look, if you're just flipping AMC stock on Robinhood, you're not going to achieve trader tax status. Now, if you have a corporation and you open up corporate accounts and you have bylaws for that corporation written specifically as a foreign exchange trader in the business of speculation for profit and loss in changes in value of the foreign exchange, currency system. Then, and you have trades that match that, not day trading, not investing, right? You will achieve trader tax status and you'll get taxed differently, okay, Elm? And they'll say, oh, well, the money in your account is inventory because you trade cash. Okay? So they'll look at this as inventory. Okay? Oh, sorry. We'll go this way. This is inventory. It's not profit sitting around that they want to tax. They'll say, oh, that's your inventory. Because like you might buy $1 million worth of shoes, but you're going to sell the $1 million worth of shoes for $5 million, right? So they're going to say, oh, well, your inventory, your cash, this is the business you're in, okay, is inventory. Because you're carrying over profits from years over, and so they need to look at this as inventory and tax everything accordingly. Okay? So, you said you heard you pay less taxes on futures. Man, sorry. You're probably talking to an amateur. Okay? And in that case, that's probably true. Okay? But there's a lot that you need to do if you're going to say, look, I want to be taxed like a professional. Well, you're not flipping stocks on Robinhood, right? No, you're corporate. First of all, get corporated. And of course, here's the other thing. You're like, oh, I went to some website and I paid $200 for an LLC and now I'm a professional. No, you're an amateur. Hire a frickin' lawyer and not like your divorce attorney. You're like, oh, I'm going to call John, I'm going to call Ed, my divorce attorney, and like, hey, Ed, can you get me an LLC? And like, oh, sure, I got a template somewhere. No, dude, that's not what a professional does. Call a real lawyer that specializes in setting up trading corporations that understands the IRS and the legal system, because I'll tell you, there's no actual code on the IRS books that says there's a business that purposely tries to make money on changes in the foreign exchange. There's code that says if Coca-Cola is moving money back and forth from all their subsidiaries around the world to Atlanta, to the global headquarters, or Nike moving money from Beaverton, Oregon, their global headquarters, to like Vietnam and back. And as they're moving money around, they can accidentally make or lose money on foreign exchange, because that wasn't the purpose. The purpose was to move the money. So there's code on the IRS books that says, oops, if you accidentally made or lost money, they're going to treat you favorably because it wasn't your intention. It was just a consequence of you doing your regular business. Well, to do it on purpose is weird, right? And they don't get it. So if you got like a lame ass, cheap ass LLC you bought online, and then you get audited by the government, and you go and they look at you and you're like, I'm a real trader. I'm a real trader. You're like, dude, no, you're not. Amateur all the way. Okay? So if you want to be big, be big. Do it right. Don't be cheap. Okay? That's my advice to you. Okay? Get a real finance focused lawyer, and a real compliance firm, and a real tax lawyer that understands all of this. Okay? What a big answer, huh? Yeah, well, Hope says, make sure you learn how to trade before you do any of that stuff. Great advice, Hope. The other thing is, you need to incorporate if you make a lot of money trading Forex or if you lose a lot of money trading Forex. If you just sort of break even, you won't have any benefits. There won't be any benefits because you're going to have to spend thousands of dollars up front, right? You're not making money, you're not losing money. But dude, if you're losing a lot of money, there's a lot of tax treatments that are beneficial to you on how you can write off those losses. If you're just an individual and you've lost a lot of money, I think you can write it off against where your other profits and in your other assets and businesses. I think you can do it over 1 or 2 years. But again, I'm not your tax attorney. But in Forex, as a professional, and you had a lot of losses, you can, whatever the rule is, it's much more favorable, right? Yeah, Jim's like up to 3,000, but if you lost 30 grand, you're like, well, dude, that doesn't help me, right? So maybe, right, per year, so maybe it'll take you 10 years of $3,000 washes. Where I think in Forex, you can do it, I think the whole kahuna, right? So if you lost 30 grand trading Forex, but you sold a property of yours and made 100 grand, you can write that off your tax bill, that kind of stuff. So anyways, all I'm saying is, if you want to be treated, like I say to my children, you want to be treated like an adult, you have to act like an adult. So if you want to be treated like a professional, then you got to act like a professional and hire real service providers. Okay? And I can tell you, I've hired a very expensive compliance team of experts that oversaw my compliance, and they screwed it up. Okay? They screwed it up. And so even when you're hiring big firms to help you out, even then, they can mess it up because it's so complicated. So imagine you're trying to do it on your own. Forget it. Forget it. Okay. Okay. Cool. That was good. That was good. All right. Dollars weak, that's risk on. Okay. Or a lot of money is going to Europe. Okay. The second thing is Swiss franc right now, risk off. Japanese yen, risk off. Okay. Now, you've probably been up longer than me. I've only been up a couple hours. But here's what I have heard. Cases reported in Japan. Omicron in Japan. Whoop! Not good. There was another country, but I'm not sure. But the other thing is, the vaccine companies are saying, we can do something in 100 days or so. So that really brought things down. Okay. Also, one of the CEOs said something to the effect of, holy crap, this is much different than what we would have expected. Okay. 1 or 2 mutations. Okay. But 30, like, dude, holy smokes. This is unexpected. Okay. Oh, Canada's got it. Okay. All right. So the lexicon right now, the zeitgeist, if you will. What is zeitgeist? Zeitgeist. Okay, the zeitgeist, the defining spirit or mood of a particular period. Nice word if you play Scrabble. Zeitgeist, the defining spirit or mood. Okay, the mood of the market is definitely on this idea that, oh my God, this is interesting. Okay? That's what it was, that the vaccines are not as effective. But it was also, I think, the way they said it, Johnny. Also, the founder came out and did a follow-up interview, and they're like, the co-founder was more of the scientist than the business person. And he's like, oh my God, this was surprising. Like, if we got a new variant, we would have expected 1 or 2 new mutations, and which would probably have no positive or negative effect. It'd just be a mutation, right? All of a sudden you're like, ooh, what? 30? Okay. So anyway, that's the mood right now. So money is leaving the United States, which is interesting, isn't it? Normally in a situation like this, the dollar would strengthen as money would flow into the United States. So Japanese yen, this makes sense. Okay. Let me get my drawing tool. So in a risk-off mood, and that's what would normally happen with this bad news, which would negatively impact global economic activity. Japanese yen would get strong. That totally makes sense. This totally makes sense. But this is very odd. If you go back to any other global black swan events where you're like, oh my God, this is really bad for the whole world. Dollar gets strong. Well, dollar's weak right now, but you're like, wait, but the pound is weak. Wait, but the Aussie is weak. Wait, the Kiwi's weak. Wait, the CAD's weak. So where's it going? This is the dollar going somewhere. So where is it going? Back to Europe. So this is Europeans selling their euro dollar shorts, which means they're not actually longing. They're getting out of euro dollar shorts. They're bringing money back to Europe. That doesn't mean technically they're taking the dollars they were buying, presumably to buy the S&P 500, and they're like, oh my God, we don't need these dollars anymore. So they sold the dollar and got their euros back. And that's how I look at this. Got the euros are going, right? They got their euros, because if Europe shuts down over the winter, you're going to need cash. They're going to cash. They're not buying euro. But it's nonetheless, that's the impact that you would see. So it's quite extraordinary. When will this stop? I don't know. And here's the funny thing. I wanted the dollar to weaken this whole time. And now I'm like, wait, this doesn't make sense. So, wow, very interesting November. This might be the most interesting November I can remember in the 20 years that I've traded. Dollar's strong when it's supposed to be weak, and then it's weak when it's supposed to be strong. Okay, cool. And you might say, well, no, you got your bias wrong or something. Well, no, I have seasonality on my side. But the other thing is, like, in this situation, risk off is risk off. It's just straight up, straightforward. It's not like I'm wrong. That's what happens. In a risk off mode, dollar strengths. So it's cool. Could we see, it's too backward looking, Gary. but you can look at any time, obviously on your own. But like these things that we're witnessing now have happened over the course of the last 5 days. So I'm more interested in the now. And maybe another way of looking at commitment of traders report is you do like, is any of this logical? And I'll just pick one here. I'll just pick one. Okay. It's probably not the best one then. But nonetheless, I believe this is an R pivot. Like, this is almost a proxy for commitment of traders, because if you're using commitment of traders, you're trying to find when something is way overbought or way oversold. There's too many things in one position. Okay. And so this is an annual resistance pivot. Okay. And you're like, that's kind of interesting. Now, some of these actually went higher than that. Kiwi, maybe. I don't know. Let me try it. Lemme. Yeah. Okay. So instead of a commitment to traders report, you could say, well, Kiwi yen is way overbought, ready for a tumble. Okay. Oh, Aaron apologized. I remember we had a discussion, but I don't remember what it was. But thank you. And if I stepped on your toes, I apologize as well. Okay. So I want you to you can use the COT, which is a fundamental approach, or you can use charts, which are a technical. Okay. So this explains a lot now, doesn't it? Oh my gourd. Okay. Now, one of the reasons yen has gained a lot of strength relative to the dollar is a lot of traders like me wanted to sell the Japanese yen. And when you see moves like this, what happened? Well, they were already selling, even though it was strong. A lot of bad traders were building positions, right? Building. They're like, oh, we'll buy Kiwi dollar here, and then we'll add some more here. Oh, well, this is just dollar cost averaging. Oh, we'll get a little more. Oh, it's unbelievable. And all of a sudden they get hit. They're like, they've just lost too much money. And now bad news comes out. And what happened when the bad news came out? Stop. Because remember, if they bought here, they put a stop here. If they bought here, they put a stop here. If they bought here, they put a stop here. If they bought here, they put a stop here. And what was happening is they were buying, out. Okay? Okay? Now, what was I teaching you? Back in here, I was a bull as well, but I'm like, there were points in this move where it might go up, and I'll pick a couple of points here, maybe there, and I can't remember. We'd have to look at smaller pivots. But there were points in which I was interested. But I was cautious, and I said, well, I need to be aggressive here. Let me show you how to be aggressive without being stupid. And then I'm like, okay, now we got an Alamo that needs to be defended, but anything below this, I'm basically out until I get a change in direction, in particular on the 2155, right? And so I might have tried in here and it didn't quite work out the way I hoped. And I might have tried down here and it didn't kind of work out the way I hoped. But then even down here, what was I doing? I cut my lot size by 66%. Because I knew I was being a little overly aggressive, leaning a little too much on my thesis, but I wasn't stupid about it. Okay? And so I lost a little bit, but when I see a move like this, it's not just the bad news. You have to understand it was the bad news, okay, for people that had bet big on things like seasonality, where they're like, because I'll tell you, on Kiwi dollar, which is NZD, okay, this is yen, but typically there'd be some correlation, right? Typically, Kiwi yen goes up 2% in November. Up! So you could have just like, keep buying on the way down because we know it goes up 2%. So as it's falling, we're going to make more. Just buy on the way down. That's the thing. I've never in 20 years ever recommended that. And that's why. Someone was trying to get rich. That's not how to do it. Okay? So now we're down here. Now WTF. Well, that's the big move, okay? And it will likely remain the same. Now, some degenerate gamblers will buy this and drive it up for a while, so you need to like use your technical analysis to know when to hold them and when to fold them. But we have to trade the mood. And what I said back on Sunday before the markets opened, I was talking with the day trading and the swing trading group, and I'm like, look, the fundamentals may have changed, but we don't know anything about the virus. Okay? Technicals have certainly changed where the market dropped below support, but the thing is now we got emotion in the market where people will do stuff even if it doesn't make sense. So you got to be very, very careful. Okay? Okay? You got to be very, very careful. Cool. Coolio. Noise. Okay? 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 So you got to look at this and say, is that bullish or is that bearish? And then carry it out the way you see fit. Okay? Is this bullish or is this bearish? Carry it out as you see fit. Okay? If I was doing price action, I would look at that. If I was using moving average theory, I'd be looking at that. Both of those would be resistance. One is resistance of price. The other one is resistance of market. One is fixed. Okay, the one based on price is fixed. The other one is dynamic. The moving average is moving. Okay. Now you could say, well, Wayne, I want to buy like an inverse head and shoulders. And I think, well, do what you got to do. But I don't have any technical analysis here that says buy. No, I might be wrong. We're stuck on a psych level. Okay, fine. But I don't have any technical analysis that says buy. Cool. So you have to make some big decisions. Okay? Cool. Okay, one of the analogies I used the other day is, I see a tsunami. It's coming up the street. And you're talking about how beautiful the day is. It's a sunny, beautiful day, not a cloud in the sky, and you want to go out. I'm like, whoa, whoa. And you're like, yesterday was beautiful, and now today is beautiful. Let's go party. I'm like, whoa. Okay? Right? You can't just look at the market as like this is normal. It's not fundamental. The idea of the tsunami is the zeitgeist, right? It's the mood. It's the fear. It's bringing things down. We're hitting stop losses. Many traders are not actually trading. They're just getting hit. And they're getting out. Europe is going to cash right now. Okay? So don't kind of mix all these things like fundamentals together, and realize your technicals also might be hypersensitive or the opposite of that, like less effective. So make sure you know what your intention is before you do it, right? Okay. Gary, it's in the new MetaTraders version. So let me do it this way. Okay, FX Bootcamp Simple. Insert indicators. custom, and we got to rename it. It's got like a terrible name, like Pivots New. Yep. All right. So you can go daily or you can go annual. Okay. Okay. And gold has done almost nothing all year. Isn't that amazing? So you can make all these true if you want. Probably don't need 20 years of pivot points. I like these thicker. You can change the colors. Anyways. So if you like that, that's what it would look like. So that's the year for gold, gold, gold. Oops, I have to go out daily to get that in and then zoom in. So that's what happened this year in gold. Nothing. Okay. The average price was the central pivot. Nothing happened. Interesting, huh? Nothing happened in gold. There's a lot of people that focus heavily on gold. And I'm like, oh, well, nothing actually happened this year. Why are you so interested? Okay. Relative to something else. Okay. So like we might look at this. Okay. And I change this to annual pivot points. And so in contrast, gold did something like this. Meanwhile, oil did way down here when it was free to something more like this, okay? And can you see why I like my moving averages, how we were riding the 21, riding the 21, riding the 21, then it does a reset. Riding the 55, right? Breach now to the 200. Okay. Very often this sets up the head and shoulders. Okay. That's right, Barry. $2 days ago, I had a 2.2 pound bone-on ribeye. What I did was I cooked it sous vide, right? Right? I think it was 165. I think, was that right? Or 135? I don't remember. 165 medium rare in the sous vide. No, it wasn't a tomahawk though. It was just, just the ribeye. So I got it to medium rare sous vide. So I cooked it for about 4 hours in water. And then I took it out and I charred it. Charred? How do you spell charred? Charred? Obviously spelling's not my strength. And then charred it. Yeah. Wee. Yeah, no, it was good. But I didn't follow it up with a cigar. No. All right, cool. So you could have this if you're a bear. So really, I think crude would come down based more on demand destruction from the new variant. Now, if it's a supply issue, there's a shortage of oil, then price would go up. So you have to do your research and find out, is it supply or is it demand? Okay. So, interesting, right? Interesting. Okay. Here we are on South Africa. Keep in mind, we just hit 50%. And dollar is weak currently. Now, emerging markets, they have two issues. One, they have to borrow money. They have to borrow other people's money. So if they borrow dollars or euros, in particular euros going up like crazy right now, so that's going to hurt South Africa. Or if they borrow in dollars, once again, they can't pay it back in rand. They have to pay it back in dollars. So they're going to have to sell rand to buy dollars, and that weakens the rand. So that becomes a problem. Now, the interesting thing is South Africa actually exports a lot, so they'll actually have dollars and euros in the vault. So, right? But the other problem is if the South African economy does slow down, and our South African brothers and sisters have told us today that, you know, the government's keeping an eye on things, but it's not at the point where they're going to lock down again. Okay? But if you get to that point, there's less economic activity. Like, for example, they're making less stuff even domestically. They'll have to import more internationally. And that, again, is selling rand. Okay, so if they have to borrow foreign money or pay back loans in foreign money, or because of shortages, they have to buy stuff from outside their borders, it ends up weakening the currency. Okay, it's a form of, like, you can almost think of it as like the way that imperialism works. So if you think about, well, you can take like British imperialism or Japanese imperialism, but imagine like the British working with the Americans back in the time of the colonies, right? Where the British would buy stuff from the colonies and import it. Now, it was cool because they get to do a couple of things. That means they're weakening their pound because they're selling pound to buy tea or where, no, they were forcing tea on, it was the other way around. But buying, I don't know, textiles from Boston, right? So they're basically selling the pound to buy whatever currency was needed, okay? But also then they would force the colonies to buy British tea, which came from India, and they would have high prices for that. And they played the foreign exchange against the colonies. And this is how imperialism works. The British would get American stuff for cheap, priced in pounds. And then they would have stuff they got from India for cheap, right? Because they did the same thing to the Indians. Raped and pillaged India. Now they got all this cheap tea from India, and then they would force high prices on top of, and force the Americans to buy the tea at high prices. And then, of course, on top of that, tax the heck out of the Americans, right? Okay? Yeah, which news, Abdul? What's on your mind? What are you worried about? We already know what's going to be said in the testimonies today. I've already addressed it. Okay. So anyways, I'm trying to address this flow of capital. Now, South Africa and Mexico are not in the same boat. So this is interesting because this is more of a direct flow, literally across the American border. Yeah, but we already know that. Haven't you read this statement? It's published. It's a published statement. He hasn't read it yet because it hasn't happened yet, but the statement's already out. The new variant of COVID is a threat to demand. It's a threat to inflation. It brings increased uncertainty, right? You've already read it, I would imagine. So that's why I talked about it, 20 minutes ago. We already know. We already know it. What we don't know is how he answers the questions. But he's not going to come out and saying, "Oh, well, this variant, it's not a problem, man. Right? Inflation's red hot. We need to jack up interest rates quickly." Well, that ain't going to happen. So you should be able to have all that out in front of you, right? He's going to be cautious. He's a dove. This is a new problem. This is a threat in many ways to what's been happening. He'll continue the pace of tapering, but, this might change the liftoff schedule. And for people that thought that was going to be next year, well, right now that's less certain. And yeah, so I wouldn't call that news. Henry says South Africa imports a lot of, oil. And it's interesting. They export a lot of gold, but they import a lot of oil. Both of those are priced in dollars, right? The interesting thing about South Africa, too, is it'll sell gold for USD and then convert the USD to Rand. But that's usually such a good deal because they have to pay their workers in Rand. Okay? So what'll happen is you'll only convert, let's say 20% of your dollars into Rand, pay off all the workers, pay the power bill and everything, and the rest is USD they keep in an offshore account. Okay? So back in 2008, there was a crisis and gold went up and all that kind of stuff. And then gold dropped by, I think it was 40%, but Rand had dropped, I don't know, I'll make up a different number, 50%. It might have been 20 and 30. Let's do it that way. So it's less dramatic. Okay. Gold dropped by 20%, but the ZAR dropped by 30%. And so even though gold dropped by 20%, profits in South Africa for gold miners were up on a 20% gold decrease because they were paying their workers with chicken feed, and they were sitting on piles of USD. Okay. Cool. Interesting, right? So anyways, this is a good sign. This shows dollar weakness. Okay. Okay. And that's good. That's showing, a couple of things. The dollar is weak. Maybe Mexicans are bringing money home, sending money home. There could be some remittance going on there. But what I'm thinking is, and I talked about this a while ago, but it could be supply chain investment. So American companies are not relying so much on, let's say making T-shirts in Vietnam. They're like, the supply chain, we can't get boats. You understand? We can't get a ship. We can get the shirts made in Vietnam, but you have to realize Vietnam locked down. Factories were closed. Some of which were permanently closed. So you're like, well, we used to make socks and T-shirts in Vietnam. Well, that got shut down. And even if you could make them, then you couldn't get a ship out of the ports. You couldn't get, and then if you actually got a ship and you got it all the way to LA, right, to LBC, Long Beach, right, or Seattle, you couldn't get it unloaded. And then when you got it unloaded, you can't get a truck driver. You're like, you know what? Let's just stop. Just stop. And they call up a factory across the border in Mexico, right? Juarez or something, right? Tijuana. And you're like, yo, we need some t-shirts. They're like, bring it on. Let's do it. And like, you can be in the United States and you can see the factory right there. That's where my t-shirts are made. And they just bring them right across the border. Supply chain solved. Right? Because look, if you can't get a truck driver to cross at a border, you can get a mule and bring it across if you need to, right? Okay? Quack says, hey, should I hold buying euro dollar and take profit somewhere else? You should stop trading. If you can't make a decision, because you don't know what's going on, you need to stop trading. Okay? And if you log into a YouTube live stream to get financial advice, you definitely need to stop trading. Thank you, Mahai. Right? You're like, dude, come on. Come on, man. Come on. Think about it. Like, really? Okay. All right. So let's take a bigger view and see how much things have changed. Okay. Yen is very, very strong. Dollar was very, very strong, but since the news last week has come down. Very interesting. This makes sense. This makes no sense. So Swissy up, yen up. And look how wonderful these things, they were coming down. Now, pound, remember, we thought when things were good 4 trading days ago, right before Thanksgiving, we thought that the Bank of England was going to raise interest rates. Do you think they're going to raise interest rates now when they're not sure about the new variant? Probably not. Okay, although we got a red hot inflation print in Europe today, the threat is, well, maybe that doesn't stick around. Again, the variant might change things. So interesting, right? So this is risk off, risk off, risk off, risk off, risk off, risk off. What the hell is going on with euro? So that's probably just anti-flow. And then this. So it's really interesting, right? So if Europeans are like, oh my God, we need cash. They're just going to cash. They're getting out of all their investments everywhere in the world. Look how amazing this impacts the market, where the only thing going up really is euro dollar. Okay? Okay? Right on, Darko. Yeah, you guys are good people. I like you. Everybody here is good people. Okay? 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 And I hope you appreciate that I'm not pitching how right I am, but more like how I get to my, or just how I get to where I am versus me being right. It's just, how did I get here? Right? Good, bad, ugly. How did I get here? What was that process? And I'm continuously in a process of trying to improve. But I don't have all the answers for you. But I know what work needs to be done to make decisions. But we can both look at just like I was saying earlier, right? This idea. You might say, oh, I looked at the data and that's demand destruction. And you're like, based on demand destruction, I'm going to do this, 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 and this. And you might be right. Now, someone else looks at the data and says, that's not demand destruction, that's supply destruction. And based on that decision, this other thing, this other thing, this other thing, this other thing is going to be traded. But they could be opposite. So like, I don't know the future. And if you think you know the future, you're wrong. You don't know the future. So it's more like, what process do you get? What process do you have in place to make a decision? And to me, that's the interesting conversation. Okay. So, wow, euro dollar. That's how much money the Europeans have invested in the United States. Okay. So one thing you could say is, oh, well, let's isolate euro dollar and try to figure out what's going on. Okay. This is Johnny's trade from yesterday. Now you can see, actually, this isn't the chart we looked at yesterday. This is what I set up last week. Okay, and correct me if I'm wrong, but I think I set it up Sunday, but this might have been, well, it wouldn't have been Friday. So this must have been Sunday I set this up. Okay, higher high, higher low, sweet spot in the fibs, daily buy zone. Johnny got the 2155. I can't do two things at once. 2155X. So Johnny's going to get a yellow Lamborghini, and his license plate will be 2155X. Huh? Take that, right? What's his name? Grant Cardone? Take that, Grant Cardone! This is the 2155X Club. 10X is good, but, right? 2155X is way better, right? So anyways, so he took that on the 1H, which was, in there somewhere. So now Johnny's up here. Cool. Okay. Right at the 21, baby. Yeah. It was, you were at 70, I think, right? He said, yeah, I'm already on that. And I'm like, well, that was a pretty good trade as long as you were on 70, wherever 70 was. And he's like, yeah, actually, I'm on 70. Like that. By the way, that's why I like having a team, especially one I trust, where I look at him like, all right, well, if I had that set up, it'd be at 70. And he looks at it. He's like, yeah, I grabbed it at 70. Well, that's great. That's good. That's a good trade. Okay. I'm very excited about having, let's say, a couple of dozen of you guys working for me. And we get everything right through specialization. Okay. And through that, we can remove all greed, all fear, all antsiness of, am I going to do the right thing next? What do I do next? How do I do this? We're just going to be epic, but it would only work if you have long-term views. If you got to get rich quick, it ain't going to happen. You can't be part of the team. So I'm looking forward to it because we're always going to have good trades. There will always be someone waiting to take the upside on this and someone always waiting to take the downside to this. So you would look at it like a bear would look at it this way. Let's change it. And you would go to indicators, bias pivots, and they would have it set up this way, waiting to take the other side, not trading against Johnny. It has nothing to do with Johnny. Johnny's long, but he's a bull. So a bear would be looking at this like, well, maybe in here I'll get a cross down. Maybe in there you can get like a lower low, lower high setup. The thing is, it never happened. But if you had multiple traders, like bulls are going to catch this. Bears were waiting and didn't get an opportunity. Bulls win. Wow. But think of it. Now the firm got it. You're always right. Oh. So I'm looking forward to that. All right. So let's get back to this. Let's change this. How, right? And then you look at Euro. How did that work? Okay. as a technical analyst, if you went on CNBC right now and they're like, talk to me, Goose. What's your outlook for euro dollar? You're like, well, our top at 122 predicts a bottom at 106. $106. What about parity? Oh, no, I didn't say anything about parity. Can we go to parity? Parity is right here. You say, well, it's possible. It could do anything at once. But that's our extreme target. But unlikely, statistically speaking, because our top at 122 predicts a bottom of 106. So, right? They're like, so what do you think? Can euro continue strength during this time of uncertainty? Well, you could say, well, we see resistance here at 114. Okay? And further resistance at 116. So maybe around, somewhere in the middle there, 115, we get a 900 pip drop with dollar strength. Now, can anybody tell me when dollar typically gets strong? Oh, January 1st. Yeah. That's Johnny's horn on this yellow Lamborghini. This is ride the 21 on it, right? Ride the 21. You're like, look at my Lambo. That'd just be awesome. Or maybe you can get a horn that sounds like a submarine. Hey, Johnny. That'd be great. Dive, dive. Anyways, cool. Interesting, right? Interesting. So we'll have to see how the new pivots come out so we can get better projections. Okay? Here's another way of thinking about it, right? Okay? Sell and hold. Okay? Here's the interesting thing. On January 1st, okay? And how many and confirm this. If you believe this is true, please confirm it, okay? On January 1st, right? Our plan was to sell euro dollar. How many people confirm that? On January 1st, okay? Truth. Nice. So we know those bears live. Now, this is the trickier question. When would we stop selling euro dollar? And that's the end of March, which is here. Look at this. I'm trying to get this right. It's pretty close. Okay? So the idea was sell, buy, and now this is the summer out. Wait, is that the male symbol? Okay. Anyways, out. Now, did I know out forever? No, but it's interesting. Someone could have played that. Okay. Here's the other thing I'm trying to point out. On the first day of trading, I'm not saying you would have, nor would you have known, but you could have sold it and you're still short now. Could have. Could have, should have, would have. I don't know. I'm just saying. Okay. Now that would be considered by the government an investment, not a trade. So anyways, so how do you feel about this? Is this the end of that flow? Well, remember though, this move that's happening now isn't really fundamental. It's a reaction to an exogenous shock. And it can do whatever it wants. It will continue going up until Europeans stop bringing money home. But if you were just simply a technician and you were zooming in, you would say you're laser focused on this area around the daily 21 EMA. Oh. Okay. Cool, right? Cool beans. Cool. So maybe there's a setup there. Oh my God, that's what we're supposed to be doing. Yeah, I know, right? So it could be interesting. Okay. So right now we're waiting for the stock market to open, and in a bit. Okay. Cool. All right. Yesterday in the day trading group, I was talking about an old 1987 documentary about Paul Tudor Jones trading something called S&P 500 futures contracts, the S&P 500 index futures contracts, and how he and his team were setting up a giant financial crash to occur in the United States by 1988. It was 1987 when they were filming the interview in his office. It's a 1-hour show. And you get to see how they were trading over the phone with floor traders executing trades. And he would work all day trading oil, trading S&P 500. And then when he got home at night, he was trading Asia. And he would do a lot of gold. He traded dollars versus Deutschmark, right? And he did everything over the phone. And he was working like basically 24 hours a day as a trader. So if you want to see what that was like, and just to see the funny cars they're driving, to see the computers they were using, how they were printing out correlations and stuff because they had to enter candlestick data into a computer manually and then print these out and make decisions, and how he was using Elliott Wave in 1987. Now, of course, the documentary ended in mid-1987. By the end of 1987, we had a huge market crash. And the whole documentary took place before. So they're just like, it's going to happen by 1988, right? By 1988, we're going to have a big crash. So it's great to see it. And then the documentary ends, but you just know they're only weeks away from being right. So if you guys want to watch that with me, let me know. So I think I could do a watch party. Has anyone done that on YouTube? So I'll try to do a watch party on the FX Bootcamp channel because I don't want to mess with Forex.Today. I don't know if it's good or bad because it's just another video on YouTube. Is that how it works? Can we do a watch party where we watch another YouTube video, or is that not possible? Now, heads up, it's 55 minutes long. So if I can't figure out how to do it on the FX Bootcamp channel, because maybe it won't let me, let us on FX Bootcamp watch someone else's video, which is probably illegally up there anyways. So if I can't do that, if I can't get it going, then maybe we'll just do it, let's say in the swing trading room. So if you're a swing trader or a day trader, you'll have access, and we can just do it over Zoom. Well, you know what? Let's just do it that way. If you're a member of FX Bootcamp's day trading group or swing trading group, let's meet over there in about, 5 minutes, and we'll just watch it together in the war room. Okay? Okay? Well, you can listen to it in the background and trade too, right? Cool. So I'll see you guys over there. Thank you for being members of this community. I'll see you tomorrow. Cheers.